A viewer asks, does the IRS also consider state payment plans in coming up with what you'll pay monthly in an installment agreement? And this is a great question. For those of you who are wondering what this question means, I'll give you some context. So, when the IRS determines how much of your tax that you owe them that you need to pay, and or how much you need to pay monthly, that's all based on your financial situation. Basically, your available equity and assets, as well as your monthly disposable income, right? Which is your net take-home pay, less all of your necessary living expenses, giving you your net disposable income, calculated the way the IRS thinks that it should be calculated. Okay, so I've gotten into how the IRS, their math works with this in other videos, but what I want to focus on today is the viewer's question, which is, can I reduce my monthly disposable income the IRS is going to use to determine how much I need to pay them in an installment agreement or even in an offer in compromise or something else? Can I reduce that monthly disposable income, the IRS calculation of monthly disposable income, by the amount that I'm paying a state, right, for state tax debt every month in a payment plan with that state? And the answer to that question is generally yes. Yes, you can. In fact, if you look at the 433A, which is the collection information statement that most folks on this channel will be using if they deal with a revenue officer. If you're dealing with ACS, they kind of use a 433F equivalent. If you're being offer and compromise, use the 433A OIC. But I have the 433A up here just to kind of show you what I'm talking about. If you go to section 5, which I think is on page 4, yeah, here we go. This is where you determine your monthly disposable income for IRS calculation purposes. And you'll see there that on line 47, there is actually a line for delinquent state or local taxes. So yes, viewer, you can reduce, it is possible to reduce your monthly disposable income for IRS collections purposes by your state, your monthly installment payment to your state. Now, the rules for this can kind of get a little tricky. There is kind of this table in the IRM telling you how much of that payment you can apply. Basically, if that installment agreement with your state was set up before the IRS assessed the tax, your IRS tax debt basically was assessed, then your full installment agreement payment to the state can be applied against your IRS debt. Okay, this is the technical answer, right? They have some other rules in the IRM where, okay, if your installment agreement with the state was established after the earliest IRS date of assessment, right, then you got to do this kind of this proration thing down here. But I'm going to be very straightforward with you. More often than not, at least in cases with ACS and sometimes even with revenue officers, they'll just take that full monthly payment to the state, and they're not even going to bother with this proration thing. But just so you're aware, there are these proration rules in the IRM based on the date that you entered into the installment agreement with the state versus the date that the earliest IRS tax that's still in the books was assessed. Okay, so just so you're aware, there are some rules there that the IRS might push back on. But my policy here at Choice Tax Relief is, hey, whenever the IRS asks us, whether it's a 433A OIC or a conversation with ACS or revenue officer and a 433A or whatever, I tell my staff, hey, just put the full amount on there. We want to be as aggressive as possible, right? We don't want to do the IRS's work for them and, we got to, look at this table and figure out, what's the proration if it has to be prorated and, maybe we can't put the whole amount. No. Let the IRS do that work, right? Let them push back here. I personally found more often than not, they're not going to push back, right? You're paying $500 to your state right now. Just put $500 on there when they ask and just move on, right? And see what they say. Because, it is an allowable expense. In fact, there's a separate line on it there on the collection information statement. And, this can really make or break sometimes a resolution for our clients. Oftentimes clients come to us, they owe federal and state. Well, the IRS only has 10 years to collect a debt. Many states have 20 years, right? This is why it's sometimes much harder to get an offer and compromise through with the state. So sometimes, when the tax professional, the EA or CPA or tax attorney on the case is reviewing the file, what they'll recommend is, okay, look, you're in a really tough state. You're in New York or California or a state like this that has taxing agencies that are really tough, very hard to get an offer and compromise through. Probably the best we can negotiate is some reasonable installment agreement with the state, right? And then use that amount with the state that you're paying to the state to wipe out your disposable income, right? So now on the Fed side, you're looking at a hardship-based resolution like a PPIA, CNC. There's special rules about if the state payment gets you to CNC, but oftentimes they don't even look at it. Those rules, right? The IRS folks you're dealing with, or even in an OIC, right? So at the end of the day, yes. Oftentimes a strategy is someone owes federal and state is to get them into a state installment agreement if that looks like all they're qualified for at the state level, which can then reduce the amount of money that the IRS wants in their monthly installment agreement, or even get them to qualify for something like an offer and compromise. So I hope that was helpful to you, viewer. It's a great question. I think I have mentioned it before on the channel, but I haven't made a dedicated video like this to it. And it's actually a very important question that a lot of people don't actually think about. If you have your own tax debt or unfiled tax returns, please reach out to us at Choice Tax Relief. You can give us a call, 866-8000-TAX, or fill out the form on our homepage, choicetaxrelief.com. I do have other tax relief videos here on the left-hand side of the screen. Thank you so much for watching, everybody. I'll see you in the next video. Bye-bye.